So tell us a little bit about yourself and your experience with investing.
Okay, so I've been in the markets for the past 2 decades. I've written 4 books with Wiley and McGraw-Hill, Bloomberg, and basically my whole thing is looking beyond just the surface level of the markets. Usually when people ask, "What's the market doing today?" The Dow's up 200 points. Well, why is my stock down? You know, when I got involved with the markets, I was always, everyone's told the conventional thinking that if a company's got, good growth, earnings, et cetera, stocks should continue to rise. And in a wider time frame, that tends to be true. My question when I first got into the markets is, well, why is this stock fluctuating in a 2-3 point range? In 1998, I started up a website called Underground Trader, and it was a trading website, and more so, it was a website where I got really tired of these analysts coming on CNBC and giving these targets, and then looking at the level 2 screens and seeing their own market makers selling right into these upgrades. So it was more a quest for the truth, as well as trading the market, and I also love to write. So that's how I wrote articles for like Market Beat and whatnot. And when I write, and I pretty much write about 7 articles a week, and that actually helps me do the research, because it's not all technical, fundamentals, more so catalysts. That's really involved in this marketplace. When it comes to a stock's price, 3 things move a stock's price: the narrative, which impacts sentiment, which impacts price. Okay. Now here's the funny part: price, which is the sleeping dragon, can actually turn around, and when price flexes itself, it can actually change the whole narrative and the whole sentiment. Okay. So for example, because of the pandemic, in March, you would have never touched a cruise ship stock, right? They sold off. People were trapped on the cruise ships. They can't even dock. They got COVID-19. People are dying. The industry's dead. You would have never touched the cruise ship stock, okay? And so the narrative sucked. The sentiment was even worse, right? But now you're seeing the cruise ship stocks, the airlines, all coming back. And it's the narrative did change because of the COVID-19 vaccines, but the reality is once the price started surging, all of a sudden people start to think, all right, maybe the narrative has changed, maybe the sentiment has changed, but the reality is it's the price. As the price moves up, it actually can rewrite the narrative, and the narrative affects sentiment. So that's kind of like what we're seeing right now. These restaurant stocks that you wouldn't have touched in March, as they're selling off. No indoor dining, not much margins in takeout, carry out. A lot of these other restaurants that can't even do carry out. All of a sudden, you have stocks like Brinker International hitting 3-year highs. Their sales are still down year over year, probably 30%. Why is the stock hitting 52-week highs, pre-COVID highs, 3-year highs? It's just the price moved up, and then it changed the narrative, which improves the sentiment.
So you mentioned in your investing.com article that the hospitality industry has gone through kind of a market Darwinism, where the smaller companies that couldn't adapt to the changing environment got burned out. So what 3 companies are benefiting the most from having their smaller competition wiped out?
All right off the bat, Darden Restaurants, DRI. All right, they own Olive Garden. Yum Brands, Taco Bell, Pizza Hut, and then, like I said, EAT, Brinkers International. They own Chili's, and they all is it Maggiano's? They all own restaurant chains, and the local restaurants, they can't survive. I mean, if you look at California, where they're reenacting some of the lockdown restrictions, especially the restaurants and bars, They had them at 50% capacity. They dropped them down to 20%, 25% capacity. Even here where I live in Maryland, they're pushing to go ahead and once again reinitiate lockdowns, mainly for the bars and the restaurants. So, I mean, what are these guys going to do? If you're a small business, unless you got an amazing relationship with your banker, you're not getting any extra funding. You're pretty much going all out of pocket. If you have omni-channel and you have takeout and curbside, yeah, that's all right. But your margins are very thin on that. And if you go with something like a DoorDash or a Postmates, Grubhub, these guys take ridiculous cuts. They're actually a loss leader. If you're not a bigger restaurant, they're a loss leader in these little restaurants. They can't survive. And when they're gone, they can't go out and do a secondary offering and raise money. So basically, the bigger restaurants, the public restaurants, they got even more entrenched during this cycle. It's like I said, it's Darwinism, and unfortunately, it's man-made Darwinism. Congress stalled. Maybe it was political, but they stalled long enough that people threw in the towel. So you have these restaurant brands that are, when we emerge from the pandemic, they're even more entrenched. So that's why you're seeing, these stocks hitting near highs, all-time highs, definitely above pre-COVID levels, because they've gained market share because it was simply more of a war of attrition, where the little competitors went belly up.
So what's your projection for the hospitality industry for 2021?
Well, the strong will continue to get stronger. Now here's the other thing. When I talk about the market narrative, there's a macro narrative and there's micro narratives. Micro narratives can involve industries and sectors. The macro narrative is the whole market, the S&P 500. Okay, so right now the macro narrative has been buy stocks. We're going to get back a return to normalcy. Once we get the FDA, the vaccinations, right? So no matter, and you've seen how the COVID numbers, we've gotten a second or third surge, right? And the COVID numbers are getting worse, but the markets are getting higher. And that's simply because they're waiting for the vaccine to be distributed, right? Well, I was going to say to be approved. If the FDA didn't approve Pfizer's vaccine, actually today, or Moderna's, it would be a catastrophe for the markets, right? But for now, it's a foregone conclusion. You have Canada that's getting the vaccine. You've got the UK; they've already gotten the vaccine. I've never seen a period where companies are actually producing the vaccine ahead of the FDA approval. So once that happens, there's a lot of froth in the markets, and it's happening right now, especially in December, because December is a period where the liquidity thins out and then you get inertia. It's like no more gravity after the 15th. So stocks will just continue to float higher. Along with the restaurant stocks. Now, once the vaccines are approved and they start shipping those out, okay, that's when you have this reaction called sell the news reaction. Okay, right? Buy the rumors, sell the news. So I think that the markets and everything starts to fit together. I think the markets will float into January and then could start to sell off pretty hard once the vaccines get distributed and people, they wake up from the hangover and they're like, wow, holy cow, wait a minute. The stock's at 3-year highs and they're still down 20% year over year revenue.